Well, it has been a very slow weekend for Bitcoin, but even with price going sideways and doing absolutely nothing, for some reason over this weekend, we do have a commitment of trades. So I'm going to show you what that means and especially how it relates to the potential false move week beginning that we usually see sometime, anytime from now into the market open on Monday. We're going to get into Bitcoin. I'm going to cover Ethereum, and I'm also going to take a quick look at a few altcoin alerts that have just fired. I'm going to assess those altcoins to see if they may be in buy zones right now. So if you are new here, welcome. My name is Annie. I am a technical analyst and I only trade price action. I don't worry about news events or anything like that. We hunt liquidity over here. And if you are returning, welcome back. Be sure to smash that like button nice and early because it does help to get my videos around the internet. Now, let's get into what has been happening with Bitcoin so far this weekend. Now, we can see on this chart over here, this area that I have drawn a box around is the weekend price action since the US Friday close. And you can see here, EMAs have flattened out completely. We don't really have any trapped traders yet. We don't have stop hunts to the high or to the low. We are simply just in a sideways range. But when I said to you that we do, strangely enough, have a commitment of traders, that we can tell from looking at the open interest. So if we have a look at the open interest from the start of the weekend to where we are now, we are rising, and a rise in open interest means a rise in open trades. Now they can be long or short, they would be equal in order for it to be rising, meaning for every long position that is opened, a short position is also opened. And sometimes that can be the market maker opening positions against retail. So if retail are feeling mostly bullish, then most of the long positions will be retail long positions and the market maker would be opening short positions against them. And this is to cause the trap to keep price sideways before a bigger move is made come sometime around the market opening. So we're going to deep dive into that because that's what got my interest so far with the weekend price action. I want to see if we can identify who is actually going long and who is actually going short, because that's going to give us a little bit of a hint of which way the direction might go at the start of the week. And to do that, we can have a look at the CVD. And what I'm looking at here is a number of different things. The top section is the current price action on a 15-minute time frame. This bottom line here is the CVD stablecoin margin contracts, and they were actually declining over the weekend. The spot CVD is basically flat. So this one is telling me that spot buyers aren't buying the dip currently, but they're also not selling. They're just doing nothing. So this one's not a consideration to try and work out what is going to happen with price action. The next, just general CVD, is also fairly flat. But when I have a look at this little push that we've had here in the last few hours, what I would like to see, if price was moving up, I would want to see the CVD moving up and the open interest moving up. If all three of those were confluent, then I would believe that the market maker wants to send price up. So the fact that we have price going up, but we actually have a drop in open interest here, is telling me that this little recent move, which it's so tiny on a 15-minute time frame, it's not tradable, it's just that's what's happening. We have this tiny move. It's telling me that that may be a trap starting to form. So I definitely want to keep an eye on that. But in relation to the normal chart, that's this price action here. So this price action looks like it's setting up to be a trap. But I want to zoom out before we get into that detail and just have a look at where we are in the cycle, because we need to know that before we can figure out what's going to happen when the market opens. So if we have a look at the daily time frame, I've pointed this chart out to you before, and being a daily time frame, it's going to look the same for a really long period of time. But essentially the daily time frame to me looks like it's played out its W formation here. This here was a rise level 1, this here was a rise level 2, and this here was a rise level 3. And so really what I'm waiting to see is if price can push back up into this vector candle right here, either below it or somewhere into it, but not a repeat of the high of it. Will that actually create a daily time frame M formation? Because if it does, that's not good. And, we'll have more downside to come. But I'm not really against more downside, to be honest with you. Like, we do still have this 3-month level of liquidity sitting at around, say, 33 to 35K. So I really would not mind if price did come up into here, form the second side of an M formation, and then slowly make its way down through these liquidation levels, take that one out as a final, then give us a W formation. I mean, that's just going to be a really nice long long-term buy the dip moment. So yeah, I wouldn't even be worried if that happened. But this is kind of the setup I would like to see. Now, of course, if price does keep pushing up, we have to assess that if it gets into this zone and see if there's weakness there at the time. And that's what will give us the final confirmation of this kind of a trade idea. For now, it's just a trade idea with no trigger to take action. So we just want to keep that one in mind for now. But this area of liquidity that I'm sure I covered at some point, somewhere on some social media, I don't know, I lose track. This liquidity zone right here, it basically got taken out within this wick up here within the last week. So I want to have a look at that in high block, because you can see here now that that's all gone. All of that to the left of this price action is gone, and it's all blue here now. So this is the 3 months. And when we have a look at the 3 months, you can see now that the higher level of liquidity is below price, and that's the 33 to 35 that I just showed you. But you know, we do have some starting to build up at around 50, but yeah, who knows? Like we either go to 50 down to 35, or we go 35 up to 50. We need the final price action to give us a hint of which one it is. Having a look at the recent liquidity that's opened up over the weekend can help give us an idea as well about whether people are long or short. And we can see the total short liquidations is 318, total long liquidations is 311. So essentially, people are guessing. This is what I hate about consolidation. Don't know why traders do it. I get so I mean, I do know why, because it's 100% a plan by the market maker. But when traders see price action like this, consolidating for a really long period of time, they start to believe that price is squeezing. I freaking hate that word. Price is squeezing, like it's going to have a big burst, a big breakout soon. That's what we're taught, right? Like if price goes sideways, a move has to be coming, something big is building up and all that. So, and it's just designed to create FOMO, and you don't want to miss out on whichever way it breaks out. So you just guess. Like there's actually nothing in the price action right here to tell you that there is a trend to the upside or a trend to the downside, because we are literally sideways. But this right here is showing you exactly why the market maker method is so powerful, because it is doing exactly what it's designed to do. The market makers are reaching their objective. Their objective is to get you to commit to a trade. So one of the ways they do that is hold price sideways to make you bored, and you open a position because you're bored, and then you start telling yourself stories that it's going to break out and I don't want to miss out when it does. And we can see that because here we have equal longs and shorts. So that essentially means people are guessing the direction right now and don't want to miss a breakout, and they believe that one must be due because we are so flat. Right? So there's nothing in the candles to really tell you right now which way that breakout is going to happen. So anyone who has opened a trade over the weekend is essentially guessing and just hoping that when the market does open that they will be right in their guess. So for people who do trade this method, we don't have the sign to react just yet, because we don't see the false move just yet. A false move is going to look like something like a stop hunt, or it could look like, you know, a breakout that breaks above this zone, hits into a liquidation level and gives an M formation. That would be the false move and the signal that we're going down. But of course, all of that could happen the opposite way. So one thing we can do that can help us to try to identify where the false move might happen is to have a look at the lowest hanging fruit. That is the liquidity that is closest to the current price. So we use this chart to do that, and we're looking for the biggest spikes. So price is here currently. We're looking for the biggest spikes of liquidity, which are sitting out here on the right hand side, that are closest to price. So if I just quickly mark those in, so this is what we're dealing with currently, and we can get rid of this zone because we know that it's gone now. So we do have two fairly decent levels that are fairly close to this box right here, and a spike outside of the box either way is going to give you a hint of the next direction. So if we spike up into here, reject and change the structure, we would expect the start of the week to head down to the downside. However, if we come down and spike into this liquidation level first, and again we hold that level, then create a higher low, we would expect that the start of the week is going to take us to the upside. This kind of a setup could also happen here as well, because this liquidation level at 42,270 is not far either. So I would be open to both. Don't get married to the price action doing something at a price level. Just look for the shapes when they're in the zone of your area of interest. So we had a look at the daily time frame. We know the counts that we're up to there. I just want to show you this 12-hour as well, because the 12-hour was interesting to me on the weekend. I noticed that this yellow line that I've marked is the 50% vector area of this candle right here. So the 12-hour candle, and that's where we've rejected at so far. So if we are going to get that move to the upside, it's just to recover a little bit more of this red vector candle, and you'd still be looking for rejections unless price really could get all the way back up the top of it. The positive about it is we are holding above the 50 EMA, but the EMAs are flattening out. So that's the upside for the bulls that believe we're going to go up from here, is that we are holding above the 50 EMA on a higher time frame, and that is positive. And it could be that we are consolidating before the next breakout to the upside. So that's why I don't want you to be bearish or bullish right now, because in consolidation there's nothing to prove which one you should be. All I can tell you right now is what signs to look for to then get a bias. And when we have consolidation on a high time frame all the way down to the lower time frames, there's no bias to be had exactly right now. Even down to the 4-hour, we are only just above the 50 EMA right here on the 4-hour time frame, and that 4-hour time frame looks like a V shape here, a rise through this area here, another rise through here into consolidation. It's possible that we break out to the upside, take out these two liquidation levels and recover this red vector. That wouldn't surprise me if we did hold and come up first before down. So if that were to happen, keep an eye out for 44,400 kind of level. And then when we have a look at the 1-hour time frame, V shape, our rises seem to be done on the 1-hour time frame, and we are basically on the 50 EMA. So yeah, pattern is telling us we should go down. The timing is telling us be prepared for anything because it's false move week beginning. And the levels are telling us that 3 levels can be identified on most time frames to the upside. So start looking for signs of potential reversal back down to the downside. And the liquidity is showing us that there is a lot more to the downside. But just remember, when it's false move week beginning, if they want to send price into a liquidation zone, whether it's to the downside or the upside, they will usually go the opposite way first. So they will move away from that liquidation zone because that will trap more traders in that direction. Then they will do the switch and then go for the liquidity wherever the liquidity is. Sometimes it's better to just not trade on Mondays for that reason. Just let that Monday false move happen, let them take the liquidity that they want, and then you come and you have a look around the UK open and also the US open for a potential entry once that move is done. And if that doesn't show up at those 2 times on the Monday, then you just do the same thing on Tuesday, and it will usually be over by Tuesday. So with all of that in mind, let's have a look at Ethereum. I do see a typical kind of retail pattern, which is a bit of a symmetrical triangle on the daily time frame, which I imagine a lot of people would be paying attention to. But I also see really, really decent levels of liquidity above and below price. And I really like this level here because it's around the 200 EMAs. That's at around a $2,000 ETH again. And we've spiked close to there once. So I wouldn't mind a return there before we go up. I mean, even, down at the 800 would be an amazing buy opportunity in my opinion. But this one's got my first interest. And I just want to have a look at ETH BTC because that might make things a little bit clearer on ETH. Yeah, so when I look at ETH BTC, we can see here that we've been in this channel, since 2022, so a really long time. This was a breakout to the upside. I actually spoke about this a long time ago and then it happened, but we've got this break to the top of the channel. That is a good step 1. Now we're coming back for the retest at the halfway mark of the channel. That's going to be step 2 now, is to make sure this can hold. So I do like that we broke that with a vector candle because it means that we can mark in targets. So what price is doing now currently is coming to recover part of this green vector here, and it is hovering on the 50% area of that vector right now. And you can see how the price is just magically lining up with exactly the halfway mark of that vector. And this is on the daily time frame. So if this can hold now, then that's going to be a break and a retest. And if it holds, it will be a successful retest, which means that we should see a move to the upside, which will make the ETH USDT a little bit more clearer. So this gives me some hope for ETH at the moment. I'm glad we had a look at that. Now let's go through a couple of altcoin alerts that have just gone off. The first one was Fetch AI, and that has come currently into my area of interest. So once price is, this is on the 4-hour time frame, all of these will be on the 4-hour time frame. Once price has come into my area of interest, I'm looking to see if I can identify a W formation or a reason to go long. I like the first side of this currently. That's fairly decent, you know, got a nice stopping volume candle here that could have formed the first peak. We've got this move up through here that could create the center peak of a W formation, and then we've come back. Now we've come back a little bit too far, so that's not what I like. I mean, there is still trap traders down here in the wick, but I would have liked us to really not return to this red candle at all. And also, since we've returned there, it does look like we've created a lower high that has not even managed to break above the 20 EMA. So this is not looking great to me right now, and I'm going to give it more time. So I'm actually going to reset this alert and reassess what happens. Now, if this continues down here, I'm going to move, I actually might do it now. I'm going to move this area of interest down into this red vector candle right here instead, because that's going to mean that all of these are now recovered. This area here is the next area. We've spiked into it once. The 800 EMA is there. If we stay away from it now, it's positive, but if we start to come into this zone, it's not a buy yet. So one thing you got to know about me, you know, is like I will talk about altcoins when everybody's saying they're going down further. And I always tell you what to look for so that you can catch the absolute most confirmed bottom possible, right? Not the bottom, the confirmed bottom possible. So a lot of the times when I'm doing videos talking about altcoins, they're going to be very early calls that the rest of the internet is saying it's going to get worse. Okay, so just know that I'm giving you conditions of what I would need to see in order to buy so that you can buy at the best price possible. I'm never ever telling you in a video, buy now. Like that, we don't do that on this channel. And if you don't want that, like if you prefer to know when a confirmed buy is in rather than just, you know, buy now, you're going to be late, then smash a like button and let me know. Leave me a comment down below and let me know that if you prefer to be told in advance, even if the rest of the internet makes fun of me. Anyway, whatever. So that's it. I have to be honest, not liking it yet, but I want to see what happens in this area right here. The positive about it is I do like that the RSI has come into the oversold region, and I would say, and this here is a little bit of a divergence currently. If price holds where it is right now, then this is going to be a bit of an RSI divergence, because see, we've got a low here and a higher low, and then this here is only just a lower low, only by a wick. So if it comes down a little bit more, then that is definitely going to be a divergence. So keep an eye on Fetch. What you would be looking for now is price holds the level that it's at now and it starts to give you some bullish confirmation. That's what you're looking for. Bullish engulfing, railroad track, another hammer, something like that, or just price breaking back above the 50 EMA and holding the 50 EMA. The next one is Nexa. And the thing with Nexa is this was the candle that I've marked here as it was previously unrecovered, but it's not exactly the kind of candle that I like as a target to be unrecovered. And I'm going to do my best to explain why, because these candles down here were low volume and then the push kind of came. When I'm looking for a target to buy something, especially on a higher time frame, I kind of want that, I want that vector candle to be somewhere that is more significant. And this is just a break and a retest, then the volume came in, which that's what retail does, okay? So retail brings the volume on a break and retest. I want to see the volume where the market maker created the volume, which means this consolidation here is a lot better to me, because nobody would have known if that was going to break down or go up from there, and then just bang, all of a sudden it pushes out. So to me, this green vector candle here, or this area of green vector candles, they're a much better area of interest for me, because I believe that would be the market maker as opposed to these ones, which would have been retail buying a break and retest. And then when we come across to where the current price action is, it tells me that we could have a little bit more to go. So I'm going to keep an eye on where the price is now. I'm going to move that down down. So we're at the very bottom of this area here. If price holds here, great. It's not coming down into my ideal area. No problem though. It would have to start to move out with volume, break the 50 EMA that is right here, create a higher low. And on that higher low is where I would get involved. That would be the setup for where price is right now. If it breaks below this 5, 6, 7, 8, 5, 6, 7, 8, that's like my old career. But if it breaks below there, then I want to see what happens in this zone next. I'm only buying on confirmation of a breakout on this one. Otherwise, we're going to reassess when it comes down into this zone. All right, the last one I have is Stargate. And Stargate seems to just be holding a level fairly well that, you know, we're creating a descending triangle. But this is the area here that it's holding fairly well. There's the vector candle currently that it's revisited a couple of times. And here is the descending triangle. So in order for me to be interested in buying Stargate, I want to make sure it does not break below this red vector candle. Keeping in mind, guys, that if Bitcoin does create that second side M on the daily time frame and come down, none of these are going to be entries. So keep that in mind. That's why I'm saying wait for confirmation. Don't just go blindly buy right now. But it's the same kind of situation. Price is under all the EMAs. It is holding this vector currently. It needs to continue to hold that. It would have to start giving some bullish candles basically now to get out, to break above that 50 EMA, to give us a retest to move to the upside. If these candles do not come in with some volume to the upside soon, then we're probably going to come down. We probably will eat through this vector candle, and then we have to reset and set a new area as a potential to buy. Now, if you are wanting to get ready to buy some of these altcoins, most of these you will find are available on Bitget. Bitget is one of my favorite exchanges, and it is available in most countries. So if you are looking for somewhere to trade, be sure to check out the link in the description down below for that. And also, if you want to learn this method in full, consider coming to join TTC. We do have a private community where we have memberships that allow you just to learn the trading system as well as our trading and investing system. So all of the information is in the description of this video. Be sure to check all of that out. Bitcoin heat map before we go, just to see if we have any large orders coming in that might give us a hint of what's going to happen next. And honestly, these orders are seriously dead. Like, they've been seriously dead for quite some time, actually. Look how empty everything is. Like, there's just no interest. But we do have these sells up here at 44.9, which is interesting because that would take out the liquidity that I spoke to you guys about at the 44.4. So that's interesting. It's looking like there is a lot more interest in Ethereum. This is now the Ethereum heat map. A lot more interest in Ethereum. Look at all the red zones that we have here in comparison to what I just showed you on Bitcoin. So there is some price action going on here. You know, like I said to you, the ETH BTC chart looks a lot clearer. It's going to help you to understand what is happening with the USDT chart, and the heat maps on ETH have more action currently than Bitcoin does. So maybe when you're making your decision this week, it would be better to keep an eye on Ethereum over Bitcoin. Like, obviously you have to consider both, but if Bitcoin is unclear to you, do not forget to switch to ETH. ETH, you will often find, follows the model a lot more closely than Bitcoin. So you might find your clarity there. So that's the piece of advice that I can give you for the opening of the market this week, is keep your eyes on Ethereum. Another thing to note is that this week there are a lot of speaking events going on. They can sometimes cause a bit of a reaction in price, and they can make things a little bit uneasy. For example, on Monday this week, Fed Chair Powell is speaking, and he's doing interview on 60 Minutes discussing the economy and inflation risk. So that may have some effect. And then all through Tuesday to Thursday, there's a lot of FOMC members speaking. So just keep your eye on Forex Factory. Just be prepared that they may do something. They may not have a significant impact. If any of them is going to, I would expect it to be the Powell one. But if we can get through Monday and we can get through the false move week beginning, hopefully the model will start to be a little bit more clearer and we can get some really good trades. Definitely going to be a much better week than last week when we had FOMC and we had the monthly close and all that kind of stuff. So let's pray for a good trading week this week. And just remember, if it's not looking clear, go have a look at Ethereum, see if that can give you some clarity. If you want to check out more information about our community, the link is in the description of this video, along with the exchange links. Be sure to read that. There's lots of goodies down there for you. And whilst you're down there, smash that like button, hit subscribe subscribe if you're not already subscribed. And also leave me a comment and let me know how your trading week went last week and what you're expecting for this week. Are we going down or are we going up? See you guys on the next video.